Stocks kicked off the fourth quarter in stride with a nice 0.5% increase on the S&P 500. And boy, oh boy, I'm looking forward to the end of 2020. I'm sure many of you are as well. Let's see if we can make it a good one. Remember today, with it being the first day of the month, I've mentioned this several times in this presentation in the past that strangely enough, the first day of the month does tend to be more bullish than bearish. In other words, closing higher much more often than closing lower. Kind of one of those strange phenomenons that takes place within the market. So not entirely surprised to see that we were higher today, but we still got a little bit of work to do on some of the indices. The NASDAQ is actually looking quite a bit better. Today's move in the NASDAQ was up over 1%, and it was actually enough to pull the 30-day moving average higher once again. So we'll get into all that, and then we'll get into our trade application example, where I wanted to focus on a resources name on the bearish side of the equation. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's October 1st, 2020. First of all, if you're new, remember to go over to YouTube, click on subscribe on our channel, then go into the description area, sign up for our email distribution list, so that way you can be notified whenever we post these videos. We're also heavy users of Twitter. I would encourage you to follow me if you're not doing so already. My handle is @BrandonVanZ. And we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then lastly, we do have a presence on Facebook. Feel free to join our group at that web address you see embedded in the logo in front of you. All right, let's jump into the day's action. And you can see I've got chart 4B pulled up here in front of us. This will give us a nice bird's eye view on what's happening with the 4 different major U.S. equity indices. And as I mentioned in the intro, the S&P 500 was up 0.53% today, so a pretty solid day there. The NASDAQ Composite was the real star here today. Actually, I take that back for just a second, because as I glance over at the small caps, the Russell 2000 was actually up 1.5% today. But considering Apple was as large as the entire Russell 2000 at one point earlier this year, my enthusiasm is actually a little bit more evident when I talk about the NASDAQ, because it's just more influential when we're talking about a total dollars basis. You can see the NASDAQ Composite had a solid day. It was up 1.42% today. And like I mentioned in the intro, I do have some new information to share with you as a result of that big move on the NASDAQ. Of course, we've had the bullish posture on the NASDAQ for the last 4 days when the background color went from pink to green. But today showed us another change on the chart, and that is in the form of a green 30-day moving average. Notice that the last time we had a green 30-day moving average would have been back here on September 4th. So we had about a month there where the NASDAQ took a bit of a breather. And now it's kind of looking like it wants to gear up for some success again. We were chatting about some of the stars of today's trading in my online coaching class earlier today, or my question and answer class. Stocks like Peloton and Lululemon and DocuSign, those types of companies were off and running again today. A lot of those steady eddies within the NASDAQ Composite itself. So the move was large enough here recently where we're now trading above a rising 30-day moving average. I know it's hard to discern that with the naked eye, but that's why we have the color coding on there to make it a little bit easier for you to recognize. So, if all goes well and this continues to press higher, it's going to become more obvious that that moving average is actually tilted higher. Right now, it's just barely inching higher, but we'll take what we can get after what has been kind of a little bit more of a struggle, a muddling September. Now, as I'm sure you're aware, you never heard David and I hit the panic buttons or anything like that during the month of September. In fact, I thought it was funny when David was retweeting something that Jim Cramer had said about, I don't know what the exact terminology he was using, but I think it was gigantic sell-off. That was the claim that Cramer was making, and David and I are just kind of like, really, like what sell-off are we talking about right now? But kind of that type of behavior, because we try not to get too worked up on either the downside or the upside. Hopefully, we can present kind of a steady Eddie case for those of you that tune into these videos on a regular basis. So. There's always the potential for a big move up or down, but it's important to keep our eye on the chart, try to keep our emotions at bay. And at this point, things are looking more constructive once again on the NASDAQ Composite with today's behavior. So you can even see that green moving average, or not moving average, but the intermediate line on the market forecast down below, it's getting pretty close to 50 all of a sudden. So, if things don't crater in the coming week, we could very well see the background color switch to the darker shade of green very quickly. I mean, that could theoretically happen as soon as early next week. So keep your eyes on that possibility as well, where we would move from a weakly bullish posture to a strongly bullish posture once again. It's not quite as rosy on the S&P 500. You can see that it's basically closing just at its 30-day moving average. It didn't break through it the way that the NASDAQ was able to. Now keep in mind, a lot of the same companies that are driving the activity within the NASDAQ also tend to drive the S&P 500. Remember, S&P 500 is a market cap weighted index, so you're having stocks like Facebook and Apple and Microsoft, the big kahunas out there, the Alphabets and the Netflixes and those types of companies. They hold more sway within the S&P 500 because of that market cap weighting. And so if the NASDAQ composite does continue to press higher, my guess is that the S&P 500 is going to follow suit. We'll see if that takes place or not. Right now, you might be seeing some of those smaller companies like your Pelotons and your Lululemons and your DocuSigns that I mentioned before. That might account for the reason that the NASDAQ is bursting above the moving average right now. I mean, some of those stocks were doing really well today. Chewy is another example of kind of a NASDAQ stock, a coronavirus play of sorts, the pet food online delivery company. It was up like 7% today. So, you have some of those smaller, so-called coronavirus plays that are not necessarily Apple and Microsoft that seem to take a little bit more of a leadership role today. And I think that kind of explains why the NASDAQ was able to kind of have a leg up on its competition there in the S&P 500. But it is my expectation that if the NASDAQ continues to lead, which it had most of the summer, then you're probably going to find the S&P 500 is going to follow suit right behind it. You can see down below here in the lower right, the Russell 2000. It had an impressive day. It was up 1.56% today, but similar to the S&P 500, it closed basically right at its moving average. So then the question becomes, does it start rolling over at that moving average? And you can see the last time we touched it back here in mid-September, that's exactly what it did. It used it as a resistance area. But again, these markets tend to be somewhat correlated in that if we have a strong move into stocks, generally speaking, it tends to benefit all of these indices, just at slightly different degrees. Remember that the Russell 2000 has been the laggard, generally speaking, and the NASDAQ composite has been the leader, generally speaking. So I don't have a good reason why that would change right now, but obviously things like the election that can change things overnight are on the horizon, and so we always have to be mindful of that. The Dow was today's laggard, didn't really do much of anything. It was kind of flat when it was all said and done, up 0.13%. On the other hand, it is good to see its candle kind of sticking up and over that moving average a little bit there as well. So on the whole, I would say today was a pretty constructive day, but reminding ourselves that, it was the first day of the month, so it's possible that that was just a one-day pop. But I think the activity that we saw within the market with your Chewies and your Pelotons and your Lululemons going up at really healthy paces, 3, 4, 5, 6, 7%, that's a good sign for risk appetite right now as well. So I think, it was a day that I think the bulls can be proud of here today, and we'll see where it takes us. Next chart on the board. Let's go over here to the 3 green arrows chart, because we should have some information to share with you there, and we do. Remember when I did the video a couple days ago, I was saying how we were waiting for some of these charts to close above their moving averages again before we could get 3 green arrows, and today we were able to qualify a couple of those. In the NASDAQ in particular comes to mind. You can see that we got our 3rd green arrow here today as it was closing up and over its rising 30-day moving average right there. It already had green arrows on the stochastics and the MACD histogram there. So again, another good sign there in general for the risk appetite of the market to see the once proud leadership role that the NASDAQ had prior to September seems like it wants to take back that baton and go forward as kind of the leading area of the market once again. And that is generally a positive sign, because those are where some of the most exciting stocks in the market reside. And therefore, it gives us a sense that people are willing to put their money to work, and we'll take what we can get from that perspective. These other charts up here at the top, we're still kind of waiting for us to officially close above the moving averages before we can get too excited about them. Now, in terms of the 1040 crossover method, in this case, we have some positive information to share here as well. Remember that the actual posture changes that take place on this chart setup, which is 4C, for those of you that are premium members following along at home, the actual posture change takes place when the moving averages change. But as most of you are aware, this is a less sensitive approach to the market. It's not one that, you know, a short-term swing trader is going to use. It's kind of something that maybe like somebody that has a 401k account that really can't make too many transactions each quarter is going to take a look at. The idea is trying to capture the juicy part of the trend, but knowing that you're never going to be able to time the top or the bottom when you want to get out or back in. So, you know, as it stands right here, when we're looking at the 10-week moving average, which is the orange line, versus the 40-week moving average, which is the blue line, we were getting a little bit more concerned about the Russell 2000, and you can see that those two lines are the closest of the ones that we have on the board here. And so, you know, it is concerning that there could be a death cross that takes place if there is pressure within the stock market. But so far what we've seen this week is actually quite helpful for the bull's case, because while you can't really see it that well here on the Russell 2000, it seems like it's a little bit more obvious right here on the NASDAQ and on the S&P 500. Notice how that orange line is bending higher this week. Let me right click and maximize this so you can see it a little bit better. Take a look at that orange line just to the left of my mouse. It was kind of going sideways in prior weeks. We had a little tilt higher here this week as a result of us stopping that 3-week losing streak. And so far this week, with only one more day remaining, we've got a green candle there to try to get the bulls back on the board. So, you know, I think that's helpful, and maybe also helpful that you can kind of see some of these candles over here back in February prior to the coronavirus drop-off. The old idea of, you know, old resistance becoming new support, that seems to be kind of working right now from a high level perspective. It might not be perfect, but you can see that after breaking up and through that prior high, we've now pulled back, and it's possible we're just starting to kind of retest that zone, and it's going to be kind of a battleground area between the bulls and the bears, and maybe this week the bulls have the upper hand again. So we'll see where it takes us, but some promising developments there. You can see right here that we have a green arrow that shows up on this chart, so that does not set the posture, but it's kind of like a forewarning at times. Like over here, the red arrow showed up. We're getting the green arrow back, suggesting that we're trading back above the 10-week moving average. So that's generally a good sign when those green arrows start popping in there once again. So we'll see where it takes us. You know, it's kind of the same story where the Russell 2000 is the one that is most in jeopardy of going from a bullish cross to a bearish cross. But with this week's stability within the market, it is still possible they could start separating those lines once again if the bulls take over from this point forward. It's not set in stone at this point by any means that we're going to have, you know, a death cross take place in the near term. So we'll keep our eyes and ears open and see what comes our way in the markets. But right now, I would say this is a constructive week that we're dealing with right now. It's a positive sign. Let's go ahead and pop on over here to the internet briefly. And I wanted to say thank you to those of you that clicked like for me the last time I did the video on Tuesday. I always shoot for triple digits, in other words 100 or more, and we got to 109 this time, so I will make this a full-length video here today. Remember, if you like the full-length 30-minute versions of the video, click like on Twitter, and as long as they're up and over 100, I'll do the full-length version of the video the next time around. If you would prefer an abbreviated version of this video, meaning only doing it for 15 minutes and maybe cut out the trade application example or something along those lines where you just want a quick hitter in and out, then don't hit like on Twitter. And if the likes are less than 100, then I'll just do the abbreviated version the next time around. So thank you to those of you that did that. We had an awesome question and answer session class today. So for those of you that are premium members, that has been posted already to our trading rooms area, but it was a lengthy one, nearly 3 hours in length today for me because we had such excellent questions coming in from the students. So appreciate that as always. David taught his portfolio management class earlier today as well. So make sure you're checking that out. And then tomorrow he is going to be teaching his technical analysis class at 1 p.m. Eastern time. So if you've ever wanted to be taught technical analysis by a CMT, then that is your opportunity each and every Friday here at Market Scholars with David Settle. There's nobody better in the business for that. Also, wanted to point out that some of you might have seen in the popular recent posts here this kind of colorful checkerboard right here that says Trading Rooms Registration. We did open up kind of a new feature on our website exclusively for those of you that are premium members. So this would not apply to the plus members, but for those of you that are premium members, we have a link on our website that you'll be able to go to at the first of every month to be able to register for all of the upcoming classes at once. So you don't have to wait for, the traditional email that we would send you or whatever. You can do that on your own now, and David will just go in there and kind of re-swap out those links every month. And so, if you pull it up, this is kind of the link where it is. And then this blue bar kind of to the right of my mouse, you would click there and then it will take you into the registration area. So for those of you that are premium members, you might want to bookmark this website within your internet browser, and that way each month that comes up going forward, you'll be able to just go on your own and register for all of those classes at once. So wanted to make you aware of that nice enhancement for the process of registering for classes going forward. All right, let's get back on track now to some of our charts, and let's start our process of looking at the 12 grids. And so I'm going to look at the asset class 12 grid. And this is chart 5A for those of you that are following along at home. And wanted to kind of see what sort of changes we've seen within the market here today. One thing that did stand out is that commodities in the form of oil and gas commodities in the energy complex really got hit today. Now we closed well off the lows, but it was still a hit of about 3% on oil, and natural gas also got beat up today. So that kind of stays with that bearish posture that we've been talking about. Remember on Tuesday I brought up the commodities 12 grid to have that discussion, and that kind of is still playing out. It was bearish on Tuesday. It continues to be bearish here a couple of days later. And we'll talk about the sector performance here today from a stock-based basis. And, the energy stocks themselves were today's losers once again. Gold is still in kind of this area where I had mentioned on Tuesday on this candle right here that it was approaching a zone where I might look to get a little bit more bearish on gold, because as you can see, we kind of had this triple bottom formation that took place back here in August and September, and then we breached that horizontal support area here in mid-September. We ultimately got an oversold cluster signal, and now we're on that reflex move right here, a reversion back towards the mean type of a move. And now the question is, where does it go from here? And I'm kind of making the bet at this point, until I see further evidence, that we're going to see a rollover in gold here at some point in the next, let's call it, week or so. It might go up and start testing that downward trending 30-day moving average a little bit more. But at this point, I'm going to make the assumption, and remember, the assumptions can be wrong, but you kind of have to base your trading off of a set of assumptions. And I'm going to make an assumption that as it approaches this 30-day moving average, it's going to use it as resistance and roll over. So if that doesn't happen, obviously you've got to always be mindful of your position sizing and the risk that you're taking and the types of strategies you're implementing. But that is one thing that I'm kind of going to be on the lookout for, the idea that old support becomes new resistance at this point going forward. You can see right now you do have a weekly bullish posture on gold, so that is in the bullish camp. It's just that the chart is feeling quite heavy here. And, it's an opportunity for those of you that have been long gold stocks to maybe lighten up a little bit, maybe sell some covered calls, maybe actually shorting some other gold stocks or do something along those lines. Part of it does depend on what's going on with the dollar. You can see the chart to the left. The dollar was down today, which kind of helps support gold being up today. And the dollar, as you can see, has the pink background, where we have a weekly bearish posture according to the market forecast intermediate line. But kind of the same story as what I mentioned on Tuesday, my expectations is that it's going to find a bottom here. So at around the same time that the US dollar bottoms, I'm expecting gold to kind of top out, at least in the short term. I have kind of high aspirations for gold longer term. But in the short term, from a trading perspective, that is kind of what I'm setting my expectations for right now. We have a red moving average on gold. We have a green moving average on the US dollar. The postures are flip-flop right now, and so my expectation is that dollar comes down maybe just a little bit more, finds a bottom, starts bouncing higher. At the same time, gold is going to go up maybe a little bit more, finds a top, and starts bouncing down. So we'll see if that plays out or not, but that's kind of what's on my plate right now. In terms of other markets, there wasn't a whole lot of distinguishment between the foreign and the U.S. markets here today. Developed foreign stocks were up 0.58%. U.S. stocks were up just a hair more than that, but the emerging foreign stocks were up even more than that. So they were all kind of in that range of 0.5% to 1% up move. What I can say is that from a charting perspective, it does look like the emerging market chart is looking a little bit more appetizing for the bulls. You'll notice that the moving average changed to green here today as price was able to get up and over that 30-day moving average there. And you can see EEM is up 10% over the last 3 months, whereas EFA is only up 4.7% and the S&P 500 is only up 8.5%. So it seems like there's a little bit more leadership there within the emerging market space, and kind of similar to the conversation about the U.S. Indices. I don't mind it when the NASDAQ is the leadership, because that is where you have more speculative activity. And if you want to kind of think of these foreign areas around the world, the most speculative of the three up here at the top would be the emerging markets. And so it is a good sign of risk appetite when we see the emerging markets take a leadership role. So let's continue to cheer that on. All right, let's go ahead and take a look here at our sector 12 grid now. This will be chart 5C. It was a pretty bullish day. Many more sectors were up than down today. Of note on the downside, what I had mentioned before was energy. You'll see energy here was down 3% today. Ouch. I mean, you just cannot get out of your own way if you're in the oil and gas space right now. We had a long conversation about that, as a matter of fact, today. For those of you that are looking for the timestamp on that, on my question and answer session, it will be for Phil Richardson's question about how has my mindset changed about the 11 different sectors out there, knowing what I now know about the coronavirus. So if you're interested in my response to that, make sure you check out that recording. But anyway, energy has been a house of pain. There is no denying that. And it was down another 3% today. And remember, energy has been basically dead last on the sector selector for as long as we can remember. So, I reviewed that with you guys on Tuesday, so I'm not going to bring it up here again. But we shouldn't be surprised at this point when we see these days where energy is just getting crushed. Materials is a little bit of a different story. It was also down significantly today. It was down 1.4% today. And it was an important candle as well. As you can see, we have closed easily below that moving average. In fact, you probably had a bit of a bearish engulfing candle there from the body's perspective on materials here today if you're using XLB as your proxy. Remember, materials have actually been a leadership group. They had led the market for many months. So this is a little bit of a change of shape here in the chart that I want to be quite mindful of, because there were a lot of really nice looking charts within the material space for the late summer into the early fall. And this has a different feel to it all of a sudden in the last couple of weeks. You remember that a lot of times materials and energy kind of move in unison. And so maybe this is one of those situations where energy was right all along, and materials, maybe they didn't deserve to go up as fast as they did. Now, there is a lot more distinction within the material space than in the energy space. The energy space, you kind of have your exploration and your production, your refiners, maybe some midstream with the pipelines and what have you. But for the most part, you do find that they kind of tend to be driven in the same general direction. Materials are a lot more wide-ranging. There you've got kind of like cardboard packaging companies that do well with Amazon and UPS, and then you've got, kind of the old school coal and steel names that tend to do well when the economy is really strong. You've got gold and silver on the precious metals side that find their way into the materials, which kind of have their own set of drivers. You have air companies, so like Air Products comes to mind. Linde comes to mind with selling hydrogen and oxygen. So the point is, the material space there's a lot of variability in there depending upon different segments and how they're interacting with the economy. So keep your eye on that, because that had been a driver of the market earlier in the year, and it's possible we might be losing them all of a sudden. And my trade application example here in just a moment is going to be a bearish trade within the materials space. So let's put a pin in that. But I did want to talk about, before we do that, what worked today. And it was kind of those work from home and software stocks and things like that seemed to work once again today. You see that discretionary was up 1.3% today. So remember, Amazon is part of the discretionary sector, along with Lululemon and Peloton and those other ones that I mentioned already in the video. Communications did really well. It was up 1.4% today. So, you saw Twitter almost hit a new high today, and a lot of those social networking stocks doing pretty well. Alibaba, I guess that would be more of a discretionary, but that was another one that has been coming to life here again recently. Anyway, a lot of those e-commerce types of companies and those that kind of play into the internet seem to be rallying strongly here more recently. Technology, it is up, but it's not quite as strong as it was before. Today was a day where you saw a lot of the internet names do better than the Apples and the Microsofts. So they did fine. It's just that they're not keeping up in some cases. So and then wanted to also mention real estate down below. Real estate was up 1.6% here today, so that was a really strong one. And then utilities also up over 1%. So we had a lot of really healthy price action in several different sectors here today. In fact, the utilities, which I also spent a lot of time talking about here today in that exact same question that I mentioned before. Utilities has had a nice little run here in the last week and a half, and we've pushed up so far so fast. Notice that utilities, strangely enough, is the only dark green chart on the board. Who would have figured? So the chart doesn't look as smooth, but the recent price activity has been extremely robust for the utilities. So don't fall asleep on that often quite boring sector. All right, let's get into our trade application example now. And I'm going to pull up chart 3A. And I'm going to pull up ticker symbol Newmont, or NEM is the ticker symbol. And reminder that those of you that are premium members of Market Scholars, I already did this trade during the market session today, and you guys would have already received the notification and the trade details on Telegram. So you can always check for those trade application examples before the market closes. That's the benefit that you premium members of Market Scholars have over everybody else. That's just a free viewer of the YouTube video itself that will check out these trade ideas later in the night. So check the Telegram for the trade details as far as the fill prices and things like that. But what I can say is that I did the October weekly contracts, and it's the final week of October that I selected, and I did what's known as a bear call spread. So that's a credit spread where you're selling one strike, you're buying another. The two strikes in question here was the 66 and the 68. So over here you can see 66 and 68. Now you'll notice I've got this blue line on the chart. That represents my break even because I was able to receive 50 cents for selling that $2 wide credit spread. That gives us about a 30% return on risk. And so my break even on this trade is 66.50. And again, this is a bearish trade. So for those of you that are less familiar with kind of what we're doing when we're selling a bear call spread, effectively what my goal is for this trade is I want Newmont Mining to stay below that blue line right there. Now, what attracted me to this is, first of all, I kind of gave you guys a heads up on Tuesday. I said, don't be surprised if I come in a video very soon with a bearish idea within the gold space. And Newmont Mining is one of the few large gold companies in the United States. So it's pretty liquid, has nice options and things like that. Anyway, you can see that Newmont was somewhat similar to gold itself when I showed you a moment ago that you kind of had like a triple bottom that was taking place. Here it wasn't quite as clean as what we saw in GLD itself, but nonetheless you get the idea. Kind of there in mid-August, there again in late August, and there again in early September. You saw it toying with that orange line right there, kind of forming a resistance, or I'm sorry, a support area, and then it bounced off of it nicely and rolled over one more time, and rather than kind of trying to hold the line there, it decided to break straight through it. And that was probably a little bit of a bearish moment for this particular chart. It eventually hit an oversold cluster signal here. You can see that green dot where we've got the blue, the green, and the red lines on the market forecast all in the lower reversal zone on the same day. So here's our reflex move up and out of that oversold cluster signal. And now the question is, where do we go from here? Now, this is one where I could have waited maybe another day or so, but remember, I don't do the video on Friday or on Monday, so it's possible Newmont comes up and kisses the downtrending moving average on Monday or Friday, and I wouldn't be able to take advantage of that. So I just figured I'd jump the gun a little bit and do it here, even though it hasn't maybe exhausted itself to the upside yet, but I at least have some indications on the chart that suggests that this chart's getting a bit more bearish all of a sudden. First of all, you'll notice that the S&P 500 dotted line is well above it. In other words, Newmont is now a market underperformer. Remember, during this time period in late July, early August, it was a market beater. It is no longer doing that. It's changing its stripes before our very eyes. Of course, along the way, the 30-day moving average changed from green to yellow to eventually red, and that's where we stand right now. In other words, price is below a falling moving average. And so the path of least resistance at this exact moment in time in the immediate near term appears to be to the downside, despite the very aggressive price action off of that oversold signal here in the last week and a half or so. You can see we closed near the low of today's session as well, and you can kind of see that, where we rallied back to on this orange line happens to be that same place where we had that old support area. So the idea would be old support becoming new resistance right here after yesterday and today's price activity. Now, whether that happens or not is anybody's guess, so you always have to be mindful of the possibility that you're wrong, and you have to choose your trades accordingly. And so what I opted to do, rather than just shorting the stock outright or buying puts or what have you, just try to take it easy and give myself a little bit of flexibility to be wrong, and that's what selling a bear call spread allows you the opportunity to have, because it basically allows me to be wrong up until this blue line. If it starts trading above that blue line, then I'm going to end up losing money on the trade, and I'm going to be wrong, and that's going to happen plenty of times as well. But in the meantime, I've got at least a little bit more cushion for this thing to work a bit higher. And if it does indeed roll over, or even if it goes sideways, this is the type of trade that can benefit from that. So again, if you're a premium member, feel free to check out the Telegram for the exact trade details there, but that was the general idea here tonight, is something a little bit bearish, just a little splash of bearishness there in the gold arena. All right, I want to thank you for checking out the video. Again, if you got value out of tonight's video and you want me to do another full-length video on Tuesday when I do the video for you next time around, click like for me there on Twitter. You can always find the post pinned to the top of my timeline, or you can just click like directly on our website. Just below where you're watching the video, there's a little Twitter widget there as well. So thanks as always to those of you that commit to doing that. David will be back with you tomorrow, and I'll look forward to seeing you guys all next week. Take care, everybody. Bye-bye.